Hey everybody, what's up? Thursday, January 7th. How do you like the hat? I like it. I'll be walking down the streets of New York City with this. You don't see too many people walking around in New York with a cowboy hat, but I like this hat. Anyway, folks, I told you it was going to get crazy, didn't I? I told you it was going to get crazy, and this has gone way beyond my wildest expectations. I mean, yesterday was just a disaster. It was an outrage. It was a disgrace. You know, we have countries all over the world now looking at the United States as some kind of really, really failed state, banana republic. And it all lies at the feet of Trump. I'm sorry, it lies at the feet of Donald Trump. He is responsible. He incited that mob to violence. It was an act of sedition. Today they were talking about invoking the 25th Amendment. Maybe that's going to happen. Congress has drawn up new articles of impeachment. The guy is out of control. He's a disgrace. He's a con man. He's a narcissist. He's not capable of running a nation. Luckily, we only have 13 more days of this guy, but he still has his finger on the nuclear trigger of this country. That's a big risk, even with only 13 days left. And frankly, I'd like to see him go. And I can't believe I supported this guy in 2016. He conned me. You know, all the things he said sounded good at the time, but once he got in there, it was the same old, and it was worse. It was worse than that. So he's got to go, man, and he's going to go down in history as one of the worst. His reputation is going to be in tatters. If he doesn't end up in jail, who knows? As far as the markets are concerned, they shrugged it off. Now, a lot of people are confused by that. They look at that. They don't think it's rational, but it's completely rational, as you know. MMT people out there, and again, not to, you know, toot my own horn, but I have to, because there are no other MMT academics or MMT people out there who do what I do, take that knowledge and apply it to investing. And as a matter of fact, there's some, you know, a couple of big names, or one at least, who's had the wrong view on the markets for a long time. These fiscal flows, if you track them, if you understand them, and again, that information is available on a daily basis from the U.S. Treasury with the Daily Treasury Statement. I have my course, Understanding the Daily Treasury Statement. Nobody looks at that. Nobody understands that. I mean, you have information there. I've said it before. That's basically like inside information, but it's public information. I've told this story so many times in my day as a floor trader, when we would do everything possible to try to get to know the big brokers in the trading pit, because they would tell us, or they would hint, wink, wink, you know, I have buy orders, I have sell orders, I have stops at this level or stops below the market. I mean, having that information, we were able to front run those orders, and, you know, that was like a cash machine for us on the floor. And this is the same thing. I mean, when you understand how these fiscal flows are coming in and coming out of the economy on a daily basis, I mean, you're talking about billions, tens of billions, hundreds of billions on a daily basis. I mean, this is mega big time stuff. I mean, this makes the floor trading days that I, you know, grew up with look like kid stuff. But nobody pays attention to this. And more importantly, you know, let's get back again to policy, which is what I always try to really impress upon you, is that, you know, policy creates these trends in the markets, in equities, in commodities, in gold, in foreign exchange markets. Policy creates these trends. And the policy stays in effect for long periods of time. You don't see changes, you know, week to week or month to month. You have to understand that. You also have to understand that most people, I would say 99.9%, let me call it 100% of the people in the financial industry have a wrong understanding of that stuff. Like, I just saw another thing today from this Mohamed El-Erian. Maybe some of you are familiar with this guy. He used to be chief economist at, I think he was at the IMF, and then he worked for a time at PIMCO. You know, earlier in the 2000s, he had that infamous run-in with Bill Gross, who was like at the time called the Bond King. So this guy, they still like roll him out on these shows like CNBC and Bloomberg and all this stuff. And you know, he's still, a lot of these guys like him, he's still talking about the Fed. Like, he was bearish on the market and bearish on the economy for all of, you know, last year, COVID, and then post-COVID. And now he's like, oh, you know, so they go to him now for an explanation, and he's like, oh, well, it's because the Fed is accommodative. I mean, first of all, number one, that's old news. The Fed was accommodative, you know, right after the COVID crash in the markets and when the economy really started to contract. But is that really accommodative? I mean, I've been over this so many times. You know, the Fed doing asset purchases, that's just a giant asset swap. That's a recomposition of assets in the economy. You know, the Fed takes out treasuries, which are the highest quality collateral in the world that pays an interest rate, and it replaces that with reserves. So there's no net change there. It's an asset swap. It's a recomposition of assets. Secondly, low interest rates. You know, this is the thing that everybody forgets. For every creditor, for every debtor, there's a creditor. For every asset, there's a liability, right? It's double entry accounting. I mean, so like when you lower interest rates, somebody benefits and somebody loses, right? Creditors lose, savers lose, debtors win, right? Borrowers win. So like there's no net change there. And I've actually done studies, research that I posted on my blog and elsewhere. Going back, like I've looked at periods, for example, the late 70s into the early 80s with this enormous rise in interest rates. And then periods from like all in the 1980s when rates fell from like 20% all the way down. And I looked at loan growth. And actually we had more rapid loan growth in that period of rising rates than we had in that period of falling rates. So all of these so-called axioms or, you know, claims about what rates do, they're either completely wrong or they're opposite. Their relationship is actually opposite from what these, you know, mainstream economics guys claim it to be. You have to understand this stuff. If you understand this stuff, like I've been saying, and if you listen to my podcast the other day, I said, look, it's literally like you take a bushel basket, you go up there and you collect the money from these guys. If you have the mental game, I mean, it's like shooting fish in a barrel. The old saying, shooting fish in a barrel, because they don't know what they're talking about. They have it all wrong. So here's Mohamed El-Erian, you know, big shot in the world of economics and finance, only now saying, hey, I got an explanation for this. It's because the Fed is maintaining an accommodative stance. Okay, nothing about fiscal policy. Nothing about the massive expansion in spending. By the way, look at Bitcoin today, hit 40,000. Dollar had a little bounce today, but again, how many times do I have to come on here and say dollar is in a downtrend? And if you saw the trade numbers today, biggest trade deficit in 14 years. I mean, go look at the dollar index and go look at where it was 14 years ago. I mean, you got a long way down. A long way down. It's taken its time, and a lot of people I know are impatient, and they're like, well, why isn't it falling? Why isn't the dollar falling like the Bitcoin is going up? You know what? I look at something like that, and to me, that is like a gift, man. That's a gift. Because that's low-hanging fruit. When it really starts to go, like Bitcoin, the risk increases exponentially. When it's going like this in a very kind of hesitant move, I mean, it's just screaming at you to come on board. It's like, here, zero risk, come on board. But nobody wants to do it when it's going like that because it always looks like, oh, it's going to turn around or it's not convincing. See, that's the amateur way of looking at it. Anyway, I sent out a bunch of new information today. If you want to see it, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye-bye.